In this video, we're going to break down the first-time homebuyer incentive program, how you can apply for it, and we'll end by discussing the advantages and the disadvantages of this program. Now, before we go on, please don't forget to like, share, and subscribe. We're trying to get to 1,000 subs and we really need your help. And if you need some time to do that, here's a quick intro and I'll see you on the flip side. Now, the first-time homebuyer incentive is a program created by the government of Canada to help home buyers put together a down payment and reduce their monthly mortgage payments. So it allows eligible home buyers to borrow 5 to 10% of their down payment interest-free to purchase a home. So for example, if you're buying a home worth $500,000, you're going to need a minimum down payment of about 5% or $25,000 and a loan or a mortgage from the bank of about $475,000. You can learn more about down payments. It's in this video. I've linked it up here. Or here. There's a button here somewhere. Now, the problem is that the lower your down payment, the higher your monthly mortgage payments will be. So for that $500,000 home, with an interest rate today of about 5.5%, your monthly mortgage payments will be about $2,900 a month. But with the first-time homebuyer incentive program, the government will help increase the amount of money you have for a down payment by loaning you 5% of the total value of the house if you are buying a home that is not brand new, or 10% of the total value of the house if you're buying a home that is brand new. Now let's assume you're buying a home that's brand new. So with the help of the government of Canada, in the form of a loan of 10% or $50,000, your total down payment amount will increase to $75,000. And because you're paying more of a down payment, it means that you're taking less of a loan from the bank. So for that $500,000 house, you're going to be taking only a $425,000 loan to be exact. Now, with the same interest rate of 5.5%, your monthly mortgage payments will go down from $2,900 to $2,600, keeping about $300 a month in your pocket or $3,900 a year in savings. Now, this is money that can be saved, invested, or for most people that need this plan, used to reduce the pressure that home ownership can put on your finances. You can click the link up here to get a good idea of the average cost of running a home in Canada. Now, to be eligible for the first-time home buyer incentive, you have to meet the following criteria. First, be a first-time home buyer. Second, have a maximum household income of $120,000 per year. Next, you need to have a minimum down payment of 5% and have a mortgage loan that is insured with either the Canada Mortgage and Housing Corporation, that's CMHC, Genworth Canada, or Canada Guarantee. Now, to apply for the program, all you need to do is sit with your mortgage broker and instruct them to apply on your behalf. The good news is that the application process is quick and easy and you really don't have to do very much. But before you apply, let's talk about the advantages and disadvantages of this incentive. I'd also like to know your thoughts. Let me know if it's worth it. And if you've used this incentive before, please share your experience with us in the comment section so that we can all learn and grow together. Now, there are 4 major advantages that I need you to be aware of. Number 1, it helps low-income households by getting them lower mortgage payments. Number 2, it reduces the amount of money needed for a down payment. Very quickly, number 3, it's an interest-free loan with no monthly repayments requirements. So you're not going to be stressing about paying back the government every single month. You pay at your own convenience. And number 4, if you use this incentive to make a down payment of 20% or more, you avoid paying mortgage loan insurance. Now, if you're still fuzzy about mortgages, I've made a video explaining how mortgages work in Canada. Just click the button on the top right corner of your screen to watch and you'll be good to go. Now, let's balance this thing out with the 3 main disadvantages of this incentive. Number 1, the government of Canada owns a portion of your home if you take this incentive. What this means is that if you only own 5% of your home, you are limited to 5% of any gains or appreciation on that home. The government will own 10% of that home and any gains or appreciation if, for example, you took a 10% loan when you are purchasing the property. Now, secondly, you have to remember this is a loan. So you still have to pay back that loan in full when you sell your home or after 25 years, whichever one comes first. And finally, the loan you took from the government will be registered as a second mortgage. This means that if you're looking to refinance your home and use those funds to purchase investment properties later, it's going to be a very hard to do task or something that is next to impossible. And if you're still fuzzy on what refinancing means, click the button on the top right corner of your screen to watch an amazing story of how some of my clients use the power of refinancing to purchase their investment properties and move closer to financial freedom. And now with this, I hope this information will help you understand if the first-time home buyer incentive is right for you. Don't forget to like, share, and subscribe. And if you want me to do a deeper dive on a topic that you don't really understand, just leave it in the comments and I'll get right to it. So yeah, see you guys in the next one, where we'll be breaking down how the real estate market in Ontario works and how you can use that knowledge to set yourself up for success every single time. See you guys in the next one. Bye bye.